Hi everyone, this is a technical analyst on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected yesterday, while dropping the tightening bias in the statement and adding a slight pushback against the March rate cut. Fed Chair Powell stressed that they want to see more evidence of inflation falling back to target and that a rate cut in March is not their base case. The data supports the Fed's stance as the latest US GDP beat expectations by a big margin. The US PCE came in mostly in line with expectations, with the core 3-month and 6-month annualized rates falling below the Fed's 2% target. The US job openings surprised to the upside, although the hiring and quit rates remain below pre pandemic levels. The latest US PMIs beat expectations by a big margin for both the manufacturing and services measures. The US retail sales beat expectations across the board. The US consumer confidence report came in line with expectations, but the labor market details improved considerably. The market now expects the first rate cut in May. In Japan, the BOJ kept its monetary policy unchanged as expected, with interest rates at negative 0.10% and the 10-year JGB yield target at 0%, with 1% as a reference cap. Governor Ueda repeated once again that they won't hesitate to take easy measures if needed, but he's becoming more optimistic on achieving their 2% target. The Japanese CPI is further across all measures, which makes it even harder to expect a rate hike from the BOJ anytime soon. The latest unemployment rate ticked lower, hovering around cycle lows. The Japanese PMIs improved for both the manufacturing and services measures, although the former remains in contractionary territory. The latest Japanese wage data missed expectations by a big margin, and as a reminder, the BOJ is focusing on wage growth to decide whether to tweak its monetary policy. The Tokyo CPI recently, which is seen as a leading indicator for national CPI, fell much more than expected. The market expects the BOJ to hike rates in Q2. Now, on the daily chart, we can see that USDJPY dropped into this key support around the 146.60 level, where we can also find the red 21 moving average for confluence. This is where the buyers are likely to step in with a defined risk below the level to position for a rally into the cycle high. The sellers, on the other hand, will want to see the price breaking lower to invalidate the bullish setup and position for a drop into the previous lows. On the 4-hour chart, we can see that the pair looks to be trading inside this falling channel now, with the price bouncing on this bottom trend line around the key support zone. The first target for the buyers should be the top trend line here, with a breakout likely leading to a rally into the cycle high next. The sellers, on the other hand, should lean on this top trend line to position for a drop back into the support zone, targeting a breakout to the downside. On the 1-hour chart, we can see more closely the price action inside the channel, with the price now close to this level where we got multiple rejections from in the past few days. More aggressive traders might want to trade either a rejection from this level or a breakout to the upside. But ultimately, the best levels from a risk to reward perspective are the trend lines of the channel. Today, we have the latest US jobless claims figures and the ISM manufacturing PMI. Tomorrow, we conclude the week with the US NFP report. Strong data is likely to give the pair a boost, while weak figures should send it lower.